would say the best way to make money from property would be location, 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 as the old saying goes.
My top tip for investing in central London property is not an instant in and out, it's a long-term strategy, and that would be to buy high value or high-end rental property in good condition and buy it in a company name and borrow probably 50-60% of the asset value as part of that. You're allowed to offset the interest in the usual way when it's done in a corporate structure, and the returns are really good. And even though interest rates are higher at the moment, they won't necessarily stay at this rate, and your rental yields should easily cover them. And then long term, because we've had a real stagnation in central London prices for the last 10 years effectively, I feel that London's time is and will gradually come back, and so you should see really quite good capital appreciation. And it's a very traditional model, but it's totally doable, provided you do it in the current, under the current tax regime. You do it under a company name rather than in a private name.
A top way. Most people who want to make money in property have to add square footage or create outside space. Those are the two principal USPs that will inflate a gross developed value.
There's a lot of ways of getting involved into part ownership. So you might end up getting a bonus, for example, and you put your bonus into some of these investment platforms that are popping up. So there is one called Capital Rise that invests in developers making projects in super prime areas. You can go into those from something like £1,500 on upwards. You've got Property Partners and another recently launched one I can't remember the name of, where you can part own rental investments. So you're not getting involved with any of the headaches, but your money grows with the fund in the rental investment, and you get dividends and you get cash on a quarterly, annual basis from some of these platforms.
Top ways of making money in London property would be knowing your market in depth, inside out. I think you've got to be able to track activity in that market. So you've got to look at what's being sold, what's being rented, what's for sale and isn't selling, because that's generally a function of price, to get your bearings on value and rental value, so you understand it inside out. I think you've got to be proceedable. So you should go into the market with your finance in place. You should go into the market with your legal advisors in place, so that if you find something you want to buy, you're ready to pounce, because if you find something and you're delayed, another buyer will probably come up and take it from under you. I think you've got to be, as an investor, you've got to be buying with your head and not your heart. So don't make it emotional. This is something that you're buying as a financial instrument. So having emotion tied into that normally doesn't work. Those would be my top tips.
Ensure that it's done up in the correct manner. Do some research, market research. That's very, very important. Go and look at other properties. Ensure that you're in a good area. Always buy the best property. Always buy the worst property in the best street, or the worst property in the best development, and really go from there. I mean, it's fairly simple.
Well, I think the first thing is time in the market. It's very difficult to buy in cheaply because clients don't have to sell in almost every instance, and looking for a deal can take a lot of time and is difficult to achieve. So in the long term, the London market has always performed well in the past. So in looking to make money from a property investment, often that requires time in the market. But also it's making sure that one has the right advice from the outset. Often the best buyers will have a relationship with an agent or a buying agent to make sure that they're getting the right professional advice to avoid mistakes that are made or can be made. But also, once you've bought your property, adding square footage, improving the condition of the property, extending a lease, and lots of things to improve the saleability and attractiveness of a property. But square footage is probably the number one way to do this. There are also ways of looking at areas, which areas are up and coming in value. Now, bearing in mind that we work in a very mature market, it's difficult to find these pockets of value because it's been tried and tested, and we're not suddenly going to see a new underground line go in through Belgravia that's going to improve pounds per square foot, because the transport links are generally already there, as one example. But there are areas that we have seen a bit more of a softening in price over the last sort of 5 years that we would expect. Areas like Chelsea, where one can buy a townhouse compared to other roads in Kensington and Notting Hill at comparatively extremely good value. So knowing the areas that there is a degree of value to be found in an area, and buying well is a way of adding value.
Buy the best you can. Buy the very best thing that you can afford in the best location. There's always going to be somebody who's going to want the best. It's a bit like the art market, you know, when the art market's not doing well, the really, really great stuff will still sell, and the secondary and the sort of slightly lesser stuff will stick. So you just buy the best, and the best you can be the best one-bedroom flat. I don't know, first floor flat in Onslow Gardens with a roof terrace or something. Or, you know, a 5-6 bedroom house or whatever. So whatever it is, you know, just buy the best. And then there will always be somebody who will want to buy that off you. Whereas with the other stuff, not so much.
I would buy somewhere which is easy to let. So it's got to be near transport facilities, near shops, preferably with low service charges, without high maintenance, you know, with something where the maintenance costs are very low. Then you could let it fairly easily, either on shorter, medium or longer lets, and sell it, maybe even with a tenant in it. So you can always liquidate that asset if you ever needed to. And usually that type of asset will go up significantly over time. So it's a win-win.